America is under attack not with missiles or troops, but with something potentially more devastating, an economic weapon aimed at the heart of our economy. China just unleashed what experts call the economic nuclear option by slapping a staggering 84% tariff on critical American exports, sending global markets into free fall and threatening hundreds of thousands of American jobs. This isn't just another trade dispute, it's economic warfare that will be felt in every American household. When China decides to hit back, it doesn't just punch, it unleashes an economic tsunami designed to flood American shores. Beijing announced sweeping new tariffs averaging 84% on strategically selected American goods. The targeted products read, like a map of America's economic heartland: soybeans from Iowa, aircraft parts from Washington, semiconductors from Arizona, and medical devices from Massachusetts. The Chinese Commerce Ministry directly linked these measures to unilateral and protectionist actions by the United States. What makes this retaliation particularly potent is the surgical precision with which China selected its targets. Each product category maps to politically sensitive regions, suggesting Beijing has been studying the American electoral map with careful attention. Just when Wall Street thought it had priced in all possible trade war scenarios, China's announcement sent investors scrambling for the exits. The immediate market reaction was swift and severe. The Dow Jones plunged over 1,200 points in its worst single-day performance of the year. The S&P 500 shed for 0.3%, while the tech-heavy Nasdaq plummeted nearly 5.7%. Agricultural giants like Archer Daniels Midland saw stocks drop 11% as investors anticipated devastating losses in Chinese market access. Boeing shares crashed 15% on fears that China would cancel existing orders worth billions. Even companies with seemingly little direct exposure to China saw significant declines. Marcus de Winter, chief investment strategist at Morgan Stanley, noted, "This isn't just another day in ongoing trade disputes." The scale of these tariffs suggests China is no longer interested in negotiation. They're sending a message that they're willing to endure economic pain to challenge American policy. Behind the sterile economic statistics lie real American communities now caught in the crossfire of a conflict they never asked to join. In Decatur, Illinois, the headquarters of agriculture giant Archer Daniels Midland, the mood turned grim. The company, which exports millions of tons of soybeans and corn to China annually, now faces drastically reduced demand. Sarah Lawson, a third-generation soybean farmer from Iowa, expressed the anxiety felt across America's agricultural heartland. "We were just beginning to recover from the last round of tariffs. Many farms in our community didn't survive that hit. I honestly don't know if we can weather another storm like this." The pain extends beyond farming communities. In Wichita, aerospace manufacturer Spirit AeroSystems announced it was evaluating the potential impact of the tariff corporate speak that has local workers worried about layoffs. Economic analysts estimate up to 287,000 American jobs could be directly affected, with ripple effects potentially impacting millions more. Just as the economic implications began to sink in, Washington erupted into a political blame game that threatens to further inflame partisan divisions. President Trump wasted no time responding, declaring, "China's desperate move shows we're winning. They can't compete with American strength. We'll respond even stronger. America first, always." The White House announced it was considering additional tariffs on Chinese goods that could reach as high as 100%. Democratic leaders painted a different picture, with Senate Minority Leader characterizing the situation as an entirely preventable economic disaster caused by reckless policy. The tariff battle has created unusual political alliances. Some traditionally Republican business groups have joined Democratic critics in calling for de-escalation, while certain labor unions, typically aligned with Democrats, have expressed support for a tough stance against China. While America and China trade economic blows, the rest of the world is discovering that when economic giants fight, smaller nations risk being trampled. Stock markets from Tokyo to London followed Wall Street's plunge, with especially steep declines in export-dependent economies like South Korea, Germany, and Taiwan. The interconnected nature of global supply chains means few countries can avoid involvement in what's rapidly becoming an economic sea. Old war, particularly vulnerable, are smaller. Asian economies caught between their security reliance on the United States and their economic dependence on China. Thailand's finance minister described the situation as economic typhoon conditions threatening to wash away years of development progress. European leaders expressed alarm, with the German chancellor calling for urgent multilateral dialogue, while warning that protectionism is a dead-end street that harms everyone. As tariff announcements sent stocks plummeting, America's C-suites launched into crisis mode, frantically reassessing supply chains built over decades. Major American corporations find themselves caught in an impossible position. Companies that spent years developing Chinese manufacturing capacity now face painful decisions about whether to absorb tariff costs, raise prices for consumers, or undertake the expensive process of relocating operations. Apple saw its stock drop 7% as investors calculated potential impacts on its supply chain. An internal memo leaked from a major technology firm reveals the stark choices. We face three unpalatable options: passing costs to consumers, absorbing the tariffs and decimating our profit margins, or spending billions to relocate. Production. Walmart faces a prospect of higher prices across thousands of product categories. One retail analyst estimated that the average American household could face $1,200 in additional annual costs if the full ran. Of tariffs remains in place. As economic anxiety spread, cultural figures and everyday Americans took to social media to express everything from panic to defiance. Tech billionaire Mark Cuban warned that trade wars have no winners, only varying degrees of losing, while film director James Cameron compared the situation to two giants fighting in a china shop while the rest of us duck for cover. Country music star Taylor Thornton released an impromptu song titled Tariff Blues that went viral, capturing the anxiety of rural communities dependent on agricultural exports. Basketball legend LeBron James sparked controversy asking why. Should farmers in Ohio lose their livelihoods over politics they have no control over? On social media, hashtags like #TariffTsunami and #TradeWarCasualties trended as Americans shared personal stories about how the economic conflict has affected their businesses and communities. Public opinion polls show Americans deeply divided on trade policy, with partisan differences in who bears responsibility. However, 68% of Americans express worry about how trade tensions might affect their personal finances. As markets continue to digest the implications, economic forecasters are painting increasingly dark pictures of what may lie ahead. Goldman Sachs revised its GDP growth projection downward by 0.4 percentage points for the coming year, while warning that continued escalation could trigger broader economic disruption. Particularly concerning is the potential impact on inflation, which had recently shown signs of moderating. Higher tariffs typically function as a tax on consumers, pushing prices upward. The Federal Reserve now faces the challenge of balancing inflation concerns against the risk of economic slowdown. Consumer confidence dropped sharply in early reactions to the news, suggesting Americans are bracing for economic turbulence. With economic weapons now fully deployed, the question becomes whether cooler heads can prevail before lasting damage is done to both economies. Behind the fiery rhetoric, diplomatic channels remain open. Sources in both Washington and Beijing confirm that mid-level negotiators continue to communicate, even as public statements grow increasingly confrontational. The economic interdependence between the U.S. and China is simply too great for either side to accept permanent disruption, explains Dr. Robert Chen, international economics professor at Georgetown University. Potential off-ramps exist. Trade experts suggest a coordinated, simultaneous tariff reduction could allow both governments to claim victory while stepping back from the brink. As one veteran trade negotiator put it, we're witnessing an economic version of the Cuban Missile Crisis. Both sides have demonstrated their capability to inflict severe damage. The question is whether they can find the wisdom to step back from. the brink before launching an economic catastrophe, as markets continue their volatile response to this unprecedented economic confrontation. One certainty emerges: the rules of global trade are being rewritten before our eyes. Whether the new economic order will be built on cooperation or conflict remains the trillion-dollar question that will shape our economic future.